evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Wayne Dyer, who said, "Abundance is not something we acquire, it is something we tune into." You have tuned in to watch us tonight so that we can help you create more abundance in your life as we give you our upfront no BS approach to all things stock market. For our main topic tonight, we take a look at potash. Prices are up 170%, so does this spell opportunity? Stay tuned as Dale and I get into that and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Wowee.
Hey,
it's another week. Can you believe a week's gone?
Oh, it just flies, doesn't it? I say goodbye to you and then you're back here again. I'm not sure how that happens.
There's so many crazy things going on around the world at the moment. And I really feel sorry and sad for people who are marginalised by everything that's going on. You know, I look at extremes. You know, there's one extremes. You know, people have so much money that they will never be able to spend it in their lifetime. To people who have been so marginalised by these increasing prices, like food prices going up.
Yep.
I'm not talking about Australia. I'm talking about really poor people.
That's a worldwide thing, isn't it? Really, I mean, we make enough food for the whole world.
In countries where people don't have the resources, they're not looked after. You know, they're just left to their own devices. If they can't afford food, they can't afford it.
So what do we do?
So look, I was talking to someone about this recently, and I said, you know, we could probably. I was watching a show about solar. There's these companies that are actually.
I've been looking at solar lately.
Not for you.
Oh, no, okay.
That have been putting solar in the homes of these people in countries like India that can't afford, because they were polluting their homes with, I suppose, coal. I don't know what it was, wood. And having to breathe all of that in when they're cooking, but with the solar, it's clean. So
I saw a documentary where they actually, I forget where it was, India or China or something. They were putting septic tanks in next to a house and then making gas out of that to fire up their food. So, how's that?
That's
cooking
amazing.
your chops on the gas that's from methane.
Yes,
that comes from your sewage.
Well, there's a lot of
power generators and lights and
around.
everything else. So there you go. So that was, I thought that was pretty good. But anyway, let's actually get into the stock market, okay? Now, before we do get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I know you do, and ask us your question, then this is your opportunity to pick up your phone and call us now. The number you need to call is 03 for Melbourne 92909988. That's 03 92909988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine, I know you are champing at the bit to talk to somebody on the phone. So remember, pick up your phone and get dialing now.
While we wait for you to call, it is the 5th Tuesday in the month, and this means that Dale and I will give you our hot tip. Well, it's his hot tip. So let's get into the charts, shall we, and see what's coming up.
Geez, it's so cold today. I don't know whether it'll be a hot tip. it's like cold in Melbourne. It's like, geez.
It was.
When somebody said to me today, he said, "Oh, how is it today?" And it's a cold. And I said, "Yeah, well, in the words of the great comedian Fluffy, damn, it's cold." But hot tip for today, I'm looking at Polynovo because I know a few people have brought this up in the past, and I want to take you to the ASX website in a little bit because. It is interesting. It brings up a whole lot of different things, but I want to show the charts a little bit first because this is more of I won't say it's a higher risk stock. It's a little bit more on the speculative side than your top 50, top 20, top 100 stocks, but it is looking good because the big fall that it's had since that high there back in December 2020, it's fallen heavily, and you can see there that it's fallen over 75% of that whole range from that $4.08 high. It's fallen quite heavily, but it's really falling back to that sort of longer term momentum. And you can see here it hasn't even closed below it. It's closed right along this line. So it could be finding some support. That said, there is still a possibility that it would fall down to that 90% level of that $4.08 price, which is about 40 cents. So there still is a possibility to fall. And currently the current bar for May, we're in the last day of May, yesterday on the market report, I was saying it was the last day of the month. I was thinking it was June in my head, but Nope. That's a bit.
You were just trying to confuse me today, weren't you?
I was trying to confuse everybody yesterday. It's like
I know what it is. You were hoping it was the first of the month so you could give me a pinch and a punch
well,
on the show, weren't you?
I was doing that, but
That was your top secret plan.
I thought I'd missed out.
It's as good as it gets, everybody.
That's as good as it gets anyway. But we're seeing a little bit of weakness here towards the end of the month with the close down there. Now I'm going to go into the weekly chart a little bit and have a bit of a look at this, and then we're going to go in and have a look at what I found on the ASX website. So here's your weekly chart, and you can see here there's a high right back there in 2019, and it's providing support with that low there back in March at 98 cents. We've done a little dead cat bounce, and that's what I really liked about it.
This is the sort of stuff that you talked about in the Trading Mentor, isn't it?
Yeah, well, that's what I was about to say. This whole pattern that's happening, we teach all about what this is in our Trading Mentor course, our beginner Trading Mentor course, which is cheap as chips actually to get into, but we teach a lot of what I'm talking about.
About the support.
Yeah, and well, not just support and resistance, about, you know, talking a bit about how stocks unfold and the patterns that they're unfolding, whole range of other stuff. And so students of that course would be really looking at this stock right now if they haven't already bought it. So there's a whole lot of things we do teaching, and it, as I said, it's cheap as chips. So if you can't afford that course, you shouldn't be trading in my book, really. But right now we're looking at that. It's above a trend line, which we talk about in my books. As you can see there, it's fallen nearly 80% since that high, way back in 2020. It's found a higher low there, and it's traded strongly up through there, but it's a little bit of weakness at the last couple of weeks. So you can see a little bit of weakness through here, but some good volumes through here on this bottom and some more good volumes on that bottom. But I want to take you into the ASX website to show you some stuff, because it's fundamentally you'd be challenged with this stock a little bit.
Can I just mention one thing about the chart?
You could do that.
I guess the only thing that concerns me about stocks, I know you said it's sort of more on the speculative side.
Well, it's over $800 million.
Yeah,
I mean,
technically from the chart, I mean, it looks interesting. However, for people who are watching, the only thing that concerns me is that just because you're talking about it doesn't mean that they should be looking to buy it, because it could be totally unsuited to them, their level of experience and knowledge, and also to the portfolio that they're designing. So, and part of my reason for saying that my concern about this stock is that it doesn't have to fall far on that chart, physically looking at the chart, for it to fall 20%, does it? No,
and this is why you really need to know what you're doing. So
it
obviously from that high,
have 1 week
down to that bottom is 40% nearly. So it can fall, has potential to fall that way.
Yeah, so it could come back. Like at the moment, it's not proving that it's going up just yet.
No, which is what you're saying. I'm still in a wait and see.
Exactly. So you're being cautious.
I'm being cautious.
From here, what you're saying is that, I mean, it could come back to that line, and that's a 20% fall.
Yep. I wouldn't get into this until it broke through that previous peak. So, you know, through that sort of, that would have to get up to $1.40 for me, 41, 42 before I'd look at buying it. And some people go, well, why would you wait that long when you can make the money? Because it's safer, because there is a ton of upside should this thing go. So let's go and have a look at the ASX website. Now, where is it? Oh, this is the one I want. So this is the ASX website. So if you look up the top, you just go ASX, and you can go and look at announcements for companies and other different things here. So it's just saying here is obviously today's price is $1.23. Its volume's just under 3 million, which is pretty good. It's not too bad. And its market cap 863 mil. So
that's a decent size.
So it's a decent size. So it's not a super small stock. And we've got a basic line graph through here, and this is just the last 12 months. And you can see it's been generally falling over, but we were doing that anyway. But looking at here, you've got the fundamentals. Look at the PE, 1572.28. It's because it doesn't pay a dividend at all. It doesn't have earnings per share. It's got 0 there because it's not making a profit at the moment. And this is where some people can look at this and go, okay, well, it's not really making a profit. What's actually happening? If we look at the announcements, it had a really good first quarter report. Earnings are increasing, all sorts of stuff. So you're going to start seeing the fundamentals change. And if I scroll down a little bit, you can see here, here's its earnings. So this is revenue, or sorry, not earnings, its revenue has been growing dramatically over the since 2008. So the last 4 years, 2018, it's growing and growing and growing. Whilst here is this net profit is the blue one. So its net profit stagnated a little bit, but we've also lost, its CEO resigned last year.
So someone, if they're doing research, they should be looking into why that revenue is growing and why the profit's staying flat like that.
Do a little bit more research. Now, here's another thing interesting, saying, look at this, director share purchase. Now, David Williams is the chairman, and he spent all of May buying stock. If I go and put more announcements on here, you'll be able to see there's a bucket load. He's just constantly buying the stock at the moment. And that excites a lot of people saying, well, I should get on it if the chairman's buying. But that's not necessarily the case. But I would suggest you go into that and look at the third quarter reports, look at what it's doing, because the fundamentals will change afterwards. You know, we see the share price rise and the fundamentals will change then, and that's what will happen. So I think it's a one to watch at the moment. Okay. It's possible it could go up, but just be a little bit careful of it. So,
well, you've done well.
Hopefully it does well. Not me.
All right. That is it for our hot tip. Now it is time to get into our first email for the night.
Okay, our first question is from Sue, who says, hi, I would love your thoughts on Elders. It smashed broker forecast in its half-year results as well as forward forecast. I'm eyeing a good agri-sector stock and would love to know your view to see if this is the right time to enter. Thank you for your feedback. Sue, what do you reckon, hey?
Nice to see some of these types of stocks, and Elders is a really interesting one indeed, and it has been on a really nice trend, hasn't it?
It has been on a very, very nice trend. It has some set periods of sideways movement, which is a bit interesting, and obviously some down, but it's looking really, really good. But look at short term. If I zoom that right up,
it's down at the moment.
It's down at the moment, so that's an interesting bar that this week or last week. Sorry, this is only 2 days.
It looks like someone's trying to force it down. They've tried to ramp it up and then sold it right down. It just doesn't look normal, does it? So
time to buy or not?
No, not at the moment.
So what would you be doing?
Just wait for it to pull back. It might even come back to around $12.20. Yeah. Maybe even $12. Let's just see what it does when it's done that.
Okay. So anything else you want to look at on the stock?
Look, we could just have a quick look from a long-term perspective just to gauge where it is.
I've been told to give you more time
in the big
and space.
Picture. Have you?
Yeah.
Well, you don't often do that.
I know.
Why change?
That's true.
All right. Okay, so we can see this lovely long trend. So it's trending more recently, but the whole picture changed, didn't it, after the GFC for the stock? So you could say it's got a lot of potential upside, but then companies do change too over time. So you need to just do your research and find out what the history of this one is. But look, I'd say it looks nice. I think it's looking like it is going to come back into this zone here right now, as we said from the weekly chart. The monthly chart tells the same story.
Maybe just a little bit early at the moment, see what happens over the next few weeks.
Well, I bet Sue's glad that, if it's a she, didn't buy it.
I think it's a Sue because that's the SU is the way it was spelled, but it's short from a longer name.
Right.
So I wasn't exactly sure, but that's what she signed, or he or she signed it off as Sue.
Okay.
So that's why I use that one anyway, but I'm not going to guess, okay?
All right.
I'll probably get in trouble anyway, but we do have a caller on the line, Janine. I believe we've got Ree on the line, have we?
Hello, Dale. Yes, you do have Ree on the line. How are you?
Glad to have you on the phone, and I'd love to hear what you've got for us. Where are you from, Ree? I can't remember again.
I'm from a little village called Tomerong near Jervis Bay on the south coast of New South Wales.
God, you couldn't get any further away from me, could you?
She could if she was in the Northern Territory.
She probably could. Cool.
She might want to after this one.
Cool. Ree, you've got a question for us today? Oh, she's laughing at me. All right, well, so I think we've lost Ree, so let's get into, she was asking about Suncorp, so let's go and have a look at SUN.
Okay, so this is the longer-term chart of Suncorp. Now, this is an example of how we talk about just don't invest for the long term and hope that it's going to do okay, because you would have just pretty much tread water for a long time, wouldn't you, with this one?
You would, but it's been doing much better the last sort of 12 months or so.
It's trying to make a comeback, but I mean, insurance companies, and it is a bank and an insurance company, it's really tough for them at the moment, isn't it? I mean, that can change over time, but it's just a bit more risky out there. So let's just have a look then. Now that we've looked at the monthly, we'll change that into the weekly. And more short term, it was looking nice actually the last couple of weeks, but this week it looks like it's been sold down heavily. So this is where you've got to expect the turn and burn with some of these insurance companies at the moment with everything that's going on. So if it falls away and takes out this low on the 29th of April, then I'd be really concerned about it.
Really concerned about it. Now, obviously, rising interest rates is good for banks, and I know these tier 2 banks have got over the last few years been getting better margins. Obviously, after the GFC, their margins shrunk a lot because of the cost of funding. I know they're getting better margins now. So would you be looking at other second-tier banks as well, like Bendigo, Adelaide, other ones?
Seeing you've brought it up, you've just come in spinner. You've just let the gates open for me.
I told you I was going to give you more space tonight.
Okay, now I've actually got BOQ up here, which...
Excuse me?
Not POQ.
Oh, okay, sorry.
BOQ, Bank of Queensland.
I was being nice to you when you're saying BOQ to me.
You're trying to really stump me, aren't you? Look, now we can see at the moment it's falling, BOQ, but long term I actually like the whole pattern of this chart, and we need to just be patient and wait for BOQ to start turning up around it again. Okay. But, you know, BOQ, they're the other second-tier banks that could be interesting down the track.
Well, that's what I asked, because obviously, you know, with Sun at the moment, a little bit, I won't say it's bearish, but it's not looking fantastic at the moment. But it could do okay. And I was looking at some of these second-tier banks last week, and I thought, there's some interesting stuff happening on these. So stay tuned for all that sort of stuff.
Yep, absolutely. Our next email is from Terry. Hi, Dale and Janine. My question is, which pricing method do you prefer to buy and sell shares, at market or limit? I've always traded shares using a price limit. However, after reading your books and watching your weekly program regarding weekly and monthly charting methods, which ignores daily fluctuations, I was wondering if it would be more expedient to use at market pricing. I would appreciate your opinion on the disadvantages and advantages of at market and price limit. Regards, Terry. Well,
awesome
that's
question.
One, isn't it? Yeah, because it's a real
question.
Practical type of question that you have to face each day. Now, the simple answer is that we just trade at market. If we're just an individual putting some trades on the market, because otherwise you're trying to chase a price, and often what could happen is you put your order in the market, it doesn't get filled, you might get busy, you're working potentially, and then the following day it could drop out of bed and you've missed out on it. So once you make up your mind that you're going to sell, then you sell it. It's different for us where we're trading for clients, because we might trade at limit in the market because we're at an institutional level. That's what we need to be doing when we're trading the market. But an individual's got that flexibility where they can just put it straight on. Well,
we're doing some of these at limit trades simply because of the volume of shares we're buying, and we could push the price, whereas it's highly unlikely any individual is going to push the price of any stock, unless they're buying some of those really CRAPPY stocks that people bring up to us, where $10,000 is half a day trading.
Yeah.
So
why would somebody want to put an at limit order in if they're an individual?
The only time I would put an at limit order on is if I couldn't watch it when the market opened or in market hours, because normally you can place your trade, at 10 o'clock or 10:05 or whatever else.
Like you say, unless it's an illiquid stock, you're not going to have to fight the volume.
I'm not going to fight the volume. I'm not too, and it's about, sometimes a lot of people want a penny pinch. They don't want to.
10 cents more.
I want to get it in this price range otherwise. But it's like ships. What do they call it? Swings and roundabouts. Sometimes you win, sometimes you lose a bit, but it works out in the end. But we're always splitting hairs around 0.5% and things like that. So if you're going to buy, like you said, if you're going to buy, just buy. If you're going to sell, just sell. And
what
sell
were you
it at
market.
Say?
It's like ships. Are you trying to be
No, I was going to say ships in the night, but that's like you and me sometimes. But it was like, as I said, it was like swings and roundabouts. It's like, trying to penny pinch. And you do often miss trades. And I know some people, and I had an example of this, somebody mentioning it the other week, is they had an order in the marketplace and an at-limit order in the marketplace, and they didn't realise it was still there. They'd forgotten about it because it hadn't been taken up.
Okay.
Now, if you have that and it's 3 weeks down the track, is that a smart thing to do?
No.
No, it's not. You should be checking that every single day. If you put an at-limit order, you just get rid of it, because if you put an order to buy a stock above where it is and it doesn't hit there, but then you forget about it and then it breaks it and then turns around and goes south, you're in that stock.
True.
That happens, and I've seen that happen to people, and so you just have to be very careful with that limits orders. But
definitely.
Great question though. Oh,
I agree with you.
I thought you were going to say something.
Strange, isn't it? I agree with you.
Geez, I'm going to buy a Tats Lotto ticket tonight when I get out of here. I definitely will be, because if you're not commenting again, then I've got a weird feeling, everybody. Okay, well, Janine, I think it's about time we actually got into our topic for tonight, which is around potash and whether there might be an opportunity in this space.
Well, Dale, I know that you are from a more regional area.
Yep.
So can I say that your roots are in the country?
Absolutely, you could.
After all, we're talking about fertilisers.
I hope so.
That was my joke. You're supposed to, did you laugh? You did,
No,
didn't you?
I don't know. You get
Now you just put a fake serious face on.
I know, I do. I have to. But no, my first job was in the rural areas, talking to farmers.
Oh, you're selling poop by the side of the road?
No, I worked in a bank.
Now, you may believe that a conservation about fertilisers should be reserved more for farmers and not investors. But if you think that, then you could be missing out on the opportunity to cash in on a possible boom in potash, as its price has risen 170% in recent times.
Well, you can't blame me, but Janine, for thinking like that, as potash is used in fertilisers that farmers use to increase their crop yield. But as you say, prices for potash are up over 170%. So from, I think it was 2021, wasn't it? I think it's gone up this. So anyway, so whilst this is not good news for farmers with the rising prices and consumers, as food costs will actually rise as well, the growth price of this agricultural commodity around the world would seriously be music to the ears of companies in this space. Now, I can bet you've got some really interesting statistics on potash though.
We've got some interesting charts. Now, you know me too well. Did you know that the value of the potash mining market is forecast to grow around $21 billion US by 2026? You didn't know that, did you?
Nope, I had no idea.
And there are a number of Aussie stocks that stand to profit from their investment in this area. So tonight I wanted to discuss some of the opportunities for investors to capitalise on this growth in potash prices. And of course, I want to give everyone the opportunity to hear our thoughts on a number of stocks that have the potential to capitalise on this market, including BHP.
BHP? Now, I know, Janine, that potash has been more in the news of late due to the war in Ukraine. That's just pretty simple. So how about we make a little sense of why this is the case?
Well, it is very interesting for investors to know that Canada, Russia, Belarus and China produce around 80% of the global supply of potash, and more specifically 40% is produced in Russia and Belarus. And we know that supply from these countries was cut due to the Russian conflict, and this means supply is tight, and this squeeze on supply has driven prices higher. Let's now look at a graph to see how dramatic the price change has been.
Wow, look at that graph.
Wow. Yeah, incredible. I think it was 2020 when it started at some stage, but it's had a massive rise. I think as much as 80% in 2021, and it's kept going.
That's huge, isn't it?
Yeah, it seems to be plateauing out and possibly coming back a bit now.
We think so. If it gets too expensive, farmers are going to find something else to do.
Oh, that's right.
Maybe they're just going to hire a herd of cattle and people over the land.
Well, you'd think so, but crop prices, you know, things like soybeans, corn, the prices of commodities, agricultural commodities have been going up as well.
Yeah, well, they would be, but obviously, potash is used as a fertiliser, so they can grow more crops. But as you can say, is the demand for that. Eventually, things get too expensive, and the farmers they can't afford to buy it and still produce a crop at a reasonable price, so they can make money. So then they just don't grow the crops, or they find something different. They change, and so they adapt to that. But anyway, great graph.
Well, some of you will be familiar with the name potash, but for those who are not familiar, here is a little info for you. It's also referred to as fertiliser, potassium, and if you Google it on Wikipedia, you'll find potash is the name used for various mined and manufactured salts that contain potassium in water-soluble form. The name derives from potash, which refers to plant ashes or wood ash soaked in water in a pot.
Seriously?
Yes,
I
that's
can
the
soak
definition.
bits of burnt firewood from my fire and get fertiliser out of it. It's nice to know, but it's not really helping me invest in potash.
No. Okay, settle pedal. I like to call you that.
My wife says that to me.
Yeah, I took it off your wife. And I know that you're excited now. Potash is produced worldwide in amounts exceeding 90 million tonnes per year, with Canada being the largest producer, mostly for use in fertiliser.
Okay, that's more exciting to me.
I thought that would get you interested. Now remember, supply and demand drive commodities, and if commodities are rising, then the stocks that produce these commodities ought to trend up higher in value.
Driving stock prices up is higher is really, really good, so I'd love to hear that more about that, Janine.
Okay, remember, in the past that we've talked about trending stocks, right?
We have.
We often talk about trending stocks. And investors and traders can increase their chances of making a profit if they can find stocks that are trending. And this is why we believe this is an area of the market everyone should keep an eye on now and in the years ahead. So how about we stop talking about it and get into some interesting stocks?
That sounds like a good suggestion. So let's move over to Optima, and we got to move into, are we in the right section now?
You better get your glasses on.
I forgot to do that before. I apologise now. I was super surprised when you said BHP.
Yeah. So BHP have got quite a significant exposure in Canada.
In Canada, have they?
Yeah, they do. And so, look, it could last 100 years, they say.
100 years?
And they've got a number of mines
So there's
that
a
they
whole
own.
mine that mining potash.
Well, it's not just one that they've got. They've got a number of sites over there.
Okay.
So look, I think BHP is an amazing company, and I'm just watching how things settle out post the corporate action that we've just seen recently.
Yes, yep, with the Woodside.
Yeah. So once that settles
Wasn't that
down,
interesting?
once that settles down, I'm hoping that BHP will continue to move up again. And to me, look, I mean, potash is an area where there's a lot of illiquid stocks. There's a lot of startups in that area, a lot of specky type stocks that won't suit a lot of people's portfolios. So when you get excited about this sort of thing, it could be that some of these stocks eventually take off, and that, you know, a lot of them have been raising capital as well.
Yep.
And that can affect the share price for a while also. So it's important, if they're doing research for their own portfolio, to actually really look into the companies. If they're not the size of a BHP or one of the big, you know, say top 100 shares on the market, they really need to do their research and make sure they understand where things are at. Like you showed them on the ASX website, is the company making a profit? And understand that. Are you willing to invest in something if the company isn't profitable yet? And think about the risk associated with that.
Because you've got to be thinking some of those smaller companies. Let's say, for example, now taking your statistic, this is long-term area at the moment that you're talking about.
Yep.
Prices are high, and obviously, as we know with mining, if the price of the commodity is high, it makes worthwhile mining it. If the prices come down, it can get to that point where it's going to cost more to mine it than it's worth.
Correct.
So potash being the price it is right now might make some of these smaller companies take over targets, buy a BHP if they like that area and they want to stay into it.
Yeah, well, investors are not shy about handing over the money at the moment for these things, but it's important just to read the story of each company and know where it's at, really, is all I'm saying.
Dig between the lines and read between the lines.
So I thought what we could do is have a look at this chart of BHP just to see where things are at. Now, at the moment, with the corporate action underway, there's a little bit of contention about what about the data on the BHP chart. So I'm not looking at prices, I'm just looking at percentage moves, and I'm only looking at the shape of BHP over time. So first of all, we just sit back and have a look at the big picture of where BHP is. And we've talked before on the show at how BHP is pretty much just trading back at where it was before the GFC hit. At same sort of levels at the moment. So it really hasn't gone on, but I think it's got huge potential down the track. If BHP continues to fall away because it's been pulling back, we could see it come back to this sort of level. That's one side.
So downside maybe 20%,
we have to look at the downside.
Upside to that peak is around 20%?
Yeah, so there's enough upside from the current price action to this level. And then beyond that, there's a potential for it to go to $60 to $65.
So 40 to 60%.
Yeah, so I think this is not just driven by potash. This is obviously driven by the suite of commodities that BHP is involved in. So it's not a pure potash play. But I think investors are probably better off, if they want to get exposure to potash and they don't like the smaller stocks, to stick with a stock that's bigger.
With the stock with the bigger.
Yeah.
Okay.
So that's BHP. And then I thought we'll go through an alphabetical order. So this is not according to market capitalisation. We come down to some really you can see how illiquid
it's only 57 million,
some of these stocks are. And you sort of question, okay, if the potash prices have been rising so strongly, why has the share price of the individual company been falling?
So this is Australian Potash Limited.
Yeah, Australian Potash Limited have been, they've done a capital raising. I think it might have been, I'm not sure if it was last year or this year. And there's a difference in the potash market. There's two different grades, if you like, to keep it really simple.
Sort of like coal has different grades.
Yeah, so there's the murate, I think, I can't pronounce it properly, and then there's the sulphate of potash, which this company has exposure to. So it's a further processing. It's like a refining of the potash to make it a higher quality, and they can get a potentially higher price for it. So I haven't done extensive research on Australian potash to have a look at where it's at currently, but I can tell you from the share price that it needs to do a lot to impress me at this point.
So what does SOP on the chart stand from? Sure,
sulphate of potash, yeah.
Okay, that's cool. So
I left it there as a prompt for myself.
You can,
So its market capitalisation is only 57 million. So again, this is on the bottom end, isn't it, in terms of liquidity? You want to see at least, if you can ideally find companies that have around 300 million. As an individual, that would be the lower end of the market.
So if you decided to go into this sort of stock...
If the share price rose significantly, it's going to be up there in that order.
Yeah, no, I don't doubt that. So in terms of if somebody really did like this stock, you wouldn't bet your house on it, you'd just put a small amount in it.
Yeah. Well, look, it could fall away, and that's right. And so you've got to have a stop loss on it and just have to decide how much you're willing to risk, because it does look... I would say the description for it is what we give... when people write into us or call into the show and they say, have a look at this stock and the chart looks illiquid, you just wouldn't invest in that then.
You wouldn't invest in it, yeah.
And I guess part of my reason for bringing these stocks up is just to make people aware of these sort of things.
Yeah, well, it's only worth about 7 cents at the moment, so...
Okay, let's have a look at another one. So this is BCI Minerals. Now, I think what's happened, because some of these companies out there have had different exposure to different minerals and different ores.
Yes. And
when prices of certain things rise, sometimes they might change their focus.
Yes.
And then they start to look at other areas. So BCI Minerals comes up under a search under potash, but at the moment it's had its beautiful run from around the 2020 when the potash started going up, and then it's just gone sideways. So you'd need to have a really good look at why that is. I wouldn't even be looking at this one until it's gone through that high.
It's interesting how it's come off, even though potash has been rising,
That's why you can't just sort of read a broker's article or something and say, okay, potash is the latest thing, so let's now go and buy BCI because it's being talked about and they're raising, it could be that like APC, who are raising money, who had raised money, maybe there's a good story about them at the moment, or one of these companies, but you don't just buy because they're talking about it as a good story.
But you think with the war in the Ukraine and Russia not supplying and Belarus not supplying potash to the rest of the rest of the world, basically, you would think it would push the price of these companies up, wouldn't you?
Yeah, but it depends where they're at in their whole project life, that you see. And that's the thing. So it's really about doing that research. So Highfield Resources is another one that comes up, and this one actually looks interesting.
Really good, doesn't it?
It does. Its market capitalisation is 382 million, so it's on that bottom end still, but it's still okay. And it looks like it's made enough of an advance off the bottom to make me think that there's a potential for it to go. Now that should be, I've done it again, haven't I?
Yes.
I know I need glasses, but I've been fighting the need to get them, and I went so far as to actually go and have the appointment. They measured me up and did all those tests, and I've got a set of glasses sitting there, but there's a part of me that doesn't want to go and get them.
I think you'd look awesome in glasses.
Do you?
Yes, I think you would.
Oh, I don't know.
I'm not going to say it would make you look more intelligent, because that's what happened to me, but I think you'd look awesome in glasses.
Thank you.
Yes.
All right. There we go. So we can see here that there's a zone here, of potential for it to rise. But it's really nice this week. It's rising really strongly this week, but it needs to keep going for a couple of weeks because it could just turn and close down at the end of this week, because it's the nature of the beast. You just have a look at how it moves and how volatile it is. Know how far does it move in a week? How far does it fall in a week? Be really familiar with these shares. So
big rises, big falls.
16, 17% in a week. You've really got to be on the ball with this type of with trading, rather than I'm not talking about investing here. I'm talking about trading, because we don't know, this stock could rise up into this zone, and that could be it. It could be its heyday. You just
volumes have increased since September last year, looking a lot more steady. Still a little bit erratic, but a little bit more steady at higher levels. So
but what do we expect on the downside when it falls? It can look exciting for a few weeks, and then you get a 35% fall and it wipes out those gains. So how do you trade that? That needs to be a plan that people put together before they look at these types of shares.
Yeah, correct.
So let's go on to the next one, shall we?
Okay.
Sheffield Resources is another one. Now, this also looks interesting to me. So we've seen a nice little rise off that bottom there. It's sort of plateaued out a bit. It's come up again. I'm just waiting to see it get above 60 cents and to see if it's got the momentum to keep going. So market cap's 178 million. It's on that low side.
Yeah.
So again, be prepared that it could just drop out of bed really quickly if you're trying to get out, and you might not be able to get out at the price that you want.
It's quite a volatile stock looking at its history, isn't it?
Yes, I've done a little bit of analysis, and I'm looking at 70 to 80 cents as a possibility, but I mean, it could go to $1. And a stock, once it gets to $1, as you know, goes into a different league, doesn't
Correct.
it? So that's another interesting one there, Sheffield. Agrimin is on that low end as well, 143 million market cap.
Yeah.
It's also in the sulfate of potash. But looking at this, it looks like it's bottomed, doesn't it? Does it look like it's bottomed to you?
It looks like it's doing a whole basing sort of pattern, doesn't it? It really does. I mean, it's trading around 60 cents. So again, it's not a big one. Volumes have been, if you look at those over the last sort of 10 years, it's only, well, it is increasing the last sort of 18 months to 2 years, but nothing major.
Yeah, since the price of potash has gone up, it has increased, but then we're not seeing a corresponding increase in the stock price.
No, and that's the thing, is I'm seeing volume increasing a little bit, but whilst the stock price has risen from 30 to 60 cents over the last few weeks, you know, we can see that through here. So that low there was, what's that one? Come on, tell me what it is. 4th of March, it was at 29 cents, and by the 22nd of April, it was at 64 cents. So
now,
that's
what level of skill do you think a person needs to trade that?
I think they need to have at least your level of skill.
Oh.
Because it just literally went straight up. So you're looking at that 4th of March low at 29 cents. We've had 1, 2, 3, 4, 5, 6, 7 weeks straight up without a break, without a breather, 7 weeks straight up. And then it spent 1, 2, 3 weeks coming down, and it eroded. If we look at that, we're talking about it eroded 33% of the actual price that it hit. So it's a fairly big move up and down, and you know, that's an exciting ride if you're on that stock and you're actually somebody who's bought in somewhere. But where do you actually set your entry trigger to get into it, and then how do you know it's going to do that? That's the guesswork.
Well, I wonder if you could have used a trend line. It might have worked.
Yeah, you could have possibly used a trend line on this stock, but again, look at that. It's still it moves a hell of a lot. So trend lines are less sensitive than a lot of other tools that you might use. I mean, there's 67% rise between that low there in December 2020 and that high there in February 2021. So it moves very, very fast up. And then we're seeing some of these moves down, and we look all over the chart, and you can see so many times it goes up for a few weeks and then falls away a little bit. So you'd need to have some really good skills on this one, I think.
Look, I think it needs to just come back a bit further. We need to see if it's settled down before it then takes off again. But if it heads up and starts moving back above, say, 56 cents, 58 cents,
I think it could go a lot
on
higher.
its way again.
I think it could go a lot higher. But even if you waited till it went through $1, then you wouldn't be too... That's just being a little bit more conservative. But I do like the look of this one at the moment. You just need to have some good skills.
We do. Look, and I just wanted to talk about the fact that the commodities, the underlying agricultural commodities, you know, how they've moved. And we've just seen these massive increases since COVID.
So you're looking at soybean futures now.
Soybean futures, and just the increases we've seen in the prices of these. So if we take a date, say, just take the low even. You know, this was a 106% increase there in the prices. I mean, that's massive, isn't it?
So that was between what, May, June?
That was 2020, early
April
2020,
till when?
after COVID initially hit.
Yeah.
And that high is, I'm just trying to bring that up.
May.
It's May 2021. So
A couple of months.
Yeah. So it's a year. So you're talking about a year at least. And then it's kept going. We saw a pullback and then it kept going. So some huge volatility. These are, I mean, if you can get exposure to the stocks that are involved in these agricultural commodities, that could be another area of interest as well. But I mean, same thing with corn futures. It's almost a replica, isn't it?
It is a very big replica.
So, you know, you've got farmers out there, as you were saying before, prices, the commodities have gone through the roof. The cost of fertiliser's gone through the roof as well, but if they're getting these sort of prices...
Yeah, well, that's what farmers are looking at. Obviously, they want to produce as much as they possibly can at the cheapest price, so then they can sell it as much as they can. But being a farmer it's almost like being a futurist. You've got to predict the future because you've got to try and figure out what the weather patterns are. You've got to work out when to plant, when to obviously reap your harvest, whatever that is, whether it's, soybeans, corn.
And some of the farmers have just been devastated with the droughts and then floods we've had.
I know, it's been a real tough ride for them, the farmers.
But you're right, the planning's incredible. That's involved in knowing all of these things, and then whether to store the grain and then wait for better prices, or whether to sell it straight away. That's the other thing, and do you balance that out? We trained a few farmers years ago in the stock market just so they could understand these sorts of charts and take advantage of them.
Well, they do, and that's what they report back to us, because they can study the commodities themselves and actually work out when the commodities are going to be higher in price and when lower in price, and they study those movements in it. But because that's what farmers do anyway, and they really do know what's going on, and it's interesting to see there's starting to be a shift in farming now from being basically just farming one thing to maybe farming a few different things. So sometimes we've had that dense farm where it just does wheat and those sorts of things, whereas is that the best way to do it, everything else? Now, I'm not a farmer, I'm not even a farmer's backside, but, so I'm not an expert on farming, but I know when things get too expensive like potash, they will find another way to deliver what they need to do, because obviously they've got to make money out of that farm somehow. So if they can't grow what they need to grow, then they'll change. They'll do something else. They'll grow what they can grow.
Like the biodiversity and the organic farming as an example.
Yeah, I've got friends who have got farms near the South Australian border of Victoria and that, and they were growing wheat, and they'd go in and they bought these big farms, and then they changed it to completely organic farming methods, and they were getting crops producing much more per hectare or acre or whatever it is, whatever the measurement is, than any other farm around them, and they were doing it cheaper and getting a higher price for their crop. And the other farmers couldn't believe it, and yet they were fully organic because of the way they actually worked the soil and how they did it all. And again, I don't know the technical thing, but I remember sitting with them. I mean, they were really good friends of mine, and I'd be sitting with them having a beer, and they were telling me all of what they were doing. And they've done the same thing on orchards with fruit, citrus trees, those sorts of stuff, and they've done it in multiple different places. So all I'm suggesting is farmers are very resilient, and we need to support them, firstly, 100%, because we do run on the back of farming here in Australia, and we need to support them. But I'm just saying is if potash is too expensive and they can't buy fertiliser for their farms...
Wouldn't it be great if some of these Australian companies can produce this stuff so that we're not reliant on it from
how
overseas?
do we do that, and what alternatives are there? And it's the same when we go, if we want to talk a bit about lithium batteries too, because of obviously all the rare earths that have got to go into that, and the lithium that's got to go into it. And then, okay, when do we get too many batteries out there? How do we recycle those and those sort of things? There's a lot of questions around environmental things, but right now I think, farmers have had a hard job at the moment, and we do need to look at this. But potash is exciting at the moment. I think there are some really good opportunities from some of those stocks that you've produced. And I think a lot of people shouldn't just rely on us showing them a chart. And I think this is a real important point, is all too often people see us show them something and they go, oh, okay, I'll just do that. And they'll take little things out of context. Now, you mentioned before our beginner course with some stuff on there. There are things on these charts that on that course would teach them whether they should be in those stocks or they shouldn't be in the stock, or whether they should be looking at them and how to look at them in a better way. Because all too often I see people in some of these small stocks, they do what I call the buy and pray method. They go, oh, Dale and Janine looked at this, I'll just buy it and pray I'll make some money out of it. And that's really a solid strategy, isn't it?
No.
So, but anyway, is that all we're going to talk about tonight on this?
That's the opposite of what we want them to do, really, isn't it?
It is the actual opposite. I mean, the thing is that the smart traders and smart investors don't react. And they are stalkers of the market and the stocks. They don't just jump in and jump out. They actually look at what's moving and but also look at what's the future going to hold, because, it's no use to saying I'm just buying this for the long term or the short term. The people do, and they just throw out these things, oh, it's just short term, but they don't really know. Well, they just use those words. But we actually plan that out and go, okay, this is a long-term trade, but why? How do we work that out? How do we work out it's a short-term trade? How do we work out whether we should be in it or not in it? When do we wait? When do we go into it?
Some of those illiquid stocks, you wouldn't be you'd be crazy to try to hold those more medium term, especially if you don't know what you're doing. I mean, you know, they might be good for short term, but then you might be able to get better value elsewhere for your money. People think, oh, BHP, because it's an expensive stock, I'd be better off to go for the lower price stock.
That's a lot of crap.
That's not true.
It's not true. Yeah, you're better off buying BHP than trying to speculate on a couple of these lower
When
cap ones.
BHP's ready.
When BHP, oh yeah, well, that's what I meant, isn't it?
Come on.
Cool. All right, so can I move on, or do you want to?
Yes, you can move on.
I can move on. She's allowing me to move on. Well done. All right, well, that's it for our topic for tonight. Now, before we do get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. Now's the time to get dialing. Your number you need to dial is 039290 9988. That's 03 for Melbourne. 9290 9988. So pick up your phone right now, get dialing it, and I know you want to.
And while you call us, we will get into answering the next question, so call now.
All right, our next email is from Daz, and Daz says, "Hi Dale and Janine, thank you for your work. Can you please have a look at BSL? I brought in recently at $19.69. And it was planned to be a long-term hold." Now he goes on to say, "I can't quite get a trend line on it, and obviously not on it. Sorry," he says. "So I am a little cautious that it may keep falling. Thanks in advance for your analysis, Daz."
All right.
How did Daz go?
Well, look, it's an interesting stock, but we were actually looking at this. We look at obviously all top 100 stocks for our clients when we invest for them. However, because of some of the things that we saw on the chart, even though it had gone up for a number of weeks, there were just a number of things stacking up against it. So, you know, it could have continued to go up.
Yep.
And we would have had to face, okay, we missed the trade. Well, that happens with some. But for the number of times that we actually decide, no, we're not buying this, and then it falls away, that sort of offsets you know, the potential to make a profit on the other side. So, in other words, you're better off not to risk it if you've ticked boxes and it's saying no, the probability is against you.
Well, he's trying to get a trend line on it, and he's not sure. And right now it's falling. It's falling. It's made a lower low. It's taken out that low there, and that's the risk. So if it goes back below that low, it may continue to fall. So, you know, it's catch a falling knife scenario. I wonder why he bought there. That's what I'm really unsure of. Yeah, look, I don't know. I think at the moment it's...
Because we talk about trading with the direction, trading with momentum. Well, what was the direction at the time? That's the question to ask.
What was the direction at the time? I don't know.
Or sideways at the time, more or less. It's not rising. So just have a look at the difference of how that looks compared to what the trend up looks like, and when you would rather be on this stock. It's completely different, isn't it?
He didn't say when he was buying, when he bought.
He said the price.
He said the price, but he didn't say when. So, and I'm not sure if he says I can't get a trend line on it, but he doesn't say whether it's an uptrend or a downtrend. Obviously, he was buying, you would imply that it was a downtrend that he bought from.
Yeah.
But there's no uptrend or downtrend on that stock, and I can't see that he's done one. So I'm not sure how he's thinking that at the moment, but he's probably bought it. Let's say he bought a few weeks back through here, which is around the same sort of price. So he could have bought anywhere sort of through here, here or here, couldn't he? Around that same price. So at this point in time, right now, and it's broken through that low there, hasn't it? That's
so you're giving him the benefit of the doubt to say he started to buy it off the bottom when it started moving up, is that what you're saying?
Quite possibly, but I'm trying to be nice because I wouldn't have bought where he's bought. I can't see any really solid buy signals from this this whole period.
I think he gets that now. I think he gets that. It's just hopefully he's got a stop loss in place.
Well, he'd need to use that, I'd say. Make sure you've got your stop loss. Daz, keep sending in emails. Don't you worry about it, mate. So you'll be fine.
All right there. Well, it looks like we've got another caller on the line. Hello, Shane. How are you this evening?
Well, thanks for asking, Janine.
That's
thanks
great to hear.
for doing the show too, Dale and yourself. It's a great show.
Thank you very much. Oh, we really appreciate that feedback. Thank you. And look, you've got a stock for us tonight and a question.
It's a stock AD8, but it's also a question on maybe a tip on when I can recognise that a downtrend has actually started to be broken.
Okay.
So previously, I've been guilty of getting into stocks too early, and they'll drop further, and then the stop loss will or get taken out.
Okay. Well, I'm excited about the fact that you do have
I'm a little
stop
bit
loss.
hesitant.
That's fine. So he's a little bit
He's got a
hesitant.
stop loss at
He
least,
has.
but he keeps getting taken out every time the stock falls away, and that's the challenge for him.
Yeah, breaking a trend line is only one signal, and this is where I think a lot of people get confused. Is just you can use a trend line rule as just a one rule, but then it's like that's great, but you can have the more rules you have to say something stop falling, start rising, the more you're not going to get stopped out.
Yeah.
And that's really the thing. Is so just using a trend line that I teach in my book. Great, it'll get you in profitable trades, no problems at all. But but why you have the stop loss in there for the times that it's not going to work for you. So as a trader, like what we teach in our courses, is to have a confluence of rules to increase that again from where it is just by drawing a trend line. So right now, his question was, has it broken through the trend line? And yeah, it has. If we go and look at that weekly chart, you can see I've just drawn a trend line on that chart, and yes, it's gone above that. But am I saying if he bought now, and let's say he decided to buy, and I'm not telling him to buy, but what's to say it's not going to fall below that low there at $4.99? There's nothing to say it's not going to just turn around and go, because often you'll see stocks move up in periods and then turn around again. So what's the confirmation that is the low? At $4.99.
Well, that's where they have to understand the bigger picture analysis as well.
Yeah, so
your second book teaches them a bit about that. That's a really good book for understanding the bigger picture.
Oh yeah, so Accelerate Your Wealth. Yeah, so if he hasn't read that yet, so you're telling him to buy it?
I would say just to have a read of that book to get a bit of understanding about why stocks might continue to fall.
Yeah, so right now, looking at this, if we just briefly say, looking at that to that low, there's 24% to that low, isn't there? So, and we know if it goes past that low, then the downtrend's not over. So again, if you decided to buy this stock at the moment, then you've got to make sure you've got a stop loss on that, and that's really why we teach that in our books. The main reason we teach it is to protect people's capital, because a trend line will get you in to plenty of trades. It'll get you into plenty of profitable trades, but making sure you keep most of your capital when you get it wrong. So. But I do like what you're looking at the moment. Just be a little bit more careful. Now, we do have a caller on the line. Janine, I believe we've got Andrew on the phone. Have we, mate?
Sorry, what was that, mate?
There's Andrew there. Is that Andrew?
Hello? Yes.
Well, welcome to the show, Andrew. Where are you from?
I'm in Cairns.
Fantastic, mate. And you've got a question for us?
Yeah, mate, I just wanted to ask your guys' opinion on government bonds. Obviously, my kids have got a bit of money saved up, and try to do a little bit of research on them, but I just get your guys' take on government bonds. When's the best to invest in them, and how to invest into them?
Okay. What would be the intention of government bonds? You're looking to trade them, or are you looking to hold them for a long time? Or
Hold them for a long time.
Okay. Cool. All right. Sorry, mate.
We're hearing a bit of feedback there.
Tiny little bit of feedback, but I think we've got the question is government bonds. Interesting.
Yeah, look, obviously, we can't give personal financial advice, and it's more or less about deciding what areas of investment that people want to invest in. Why government bonds? Why bonds? Is really the question. To me, I guess I looked at this many years ago, and I couldn't see the point in investing in government bonds. I think that, years ago in our grandparents' day, there was this big push for everyone to buy government bonds.
Oh, huge.
Because it was a guaranteed investment return. They're supposed to be safe, which that's the other side of it. But, when you're talking about young people investing, do you want to, have someone in a really super conservative type of investment, or would you go the opposite? And that's really a decision.
Yeah, you've got to look at the yield, don't you, really? Government bonds, you're only going to get a yield from it, or an income from that, at whatever that price is, whether it's a short-term or long-term bond. And you can get some really long-term bonds, government bonds. But the point is why would you do that? And bonds have gone right out of favour in the last 2-3 decades, because I remember we used to get little old ladies come in the bank with their little bond coupons to get their money. And they're great investments, especially when interest rates are high. You're buying some bonds, and as interest rates drop, you can sell them for a higher price. But it's a good risk-free type of area to invest in that will give you a reasonable yield.
Yeah,
if you
when
get it at the
interest
right
rates
time.
change and inflation's changing,
But I
then you
think right
really
now
need to
it's not.
understand the impact of those things on bonds. I'm not just talking government bonds, but if anyone's buying any type of bonds,
Yeah.
that can be really important. So above all, do your research and be very thorough about it, because if it's a long-term investment, you've locked that money away.
Well, you want to be buying them when interest rates are higher, for when interest rates drop, you're still getting really good yields. That's when you want to buy them. Not really in low interest rate environments or better investments. But thank you for the call anyway, and it was really great. I'm sorry we couldn't get all of your question there, but we do have a question from somebody called Ray who says, "Hi Janine and Dale, I've read both of Dale's books in the last couple of months. Now, previously, I followed a dollar cost averaging strategy and only bought into index ETFs. Now, after reading the books, I decided to buy into shares directly, namely large cap shares, top 55 or so. Now, since I started this strategy, it has unfortunately been a sideways or falling market, but I'm still finding that I'm still beating the All Ordinaries Index, which is good news. My question is around APA. I've been watching this stock and it broke an all-time high last week after a reasonable uptrend, but this week seems to be showing some resistance. If it turns back up and breaks through that resistance around $12.10, would you consider that a buy signal, or should I be cautious as it may run out of steam? I'm keen. I am 6 to 18 months term investor. Many thanks, Ray." Great question, isn't it?
Yep,
Really
a great
good
question. Now, look, it has gone to a new all-time high, but I'd say, if you were in this trade, then great. Then I'd stay with it. But if you weren't in it at this point, right now, I wouldn't, because often when stocks go to a new high, they will pull back.
Yep.
It's as simple
It
as
will.
that.
So, I mean, there's a lot of resistance around that $11, $12, isn't it? Right across through there. So that's possibly all that.
And it's
whole
been
area.
going up for 1, 2, 3, 6 months?
6 months there. So looking at this, it doesn't surprise me it broke through and then come back a little bit. But look, would you buy it if it broke through all that resistance?
Well, it's
I think
broken through that already,
Yeah.
and now it's just taking a breather. It may take out that prior trough that you can see there.
That one?
Yeah, that's the week
10,
ending at 13th of May. If it took out that, then I'd just wait and be patient. But, I wouldn't be buying right at this point now.
No, but if it went through that high, I think I'd give it a good think about it.
Okay.
Very much think about it. I'm just excited that he's used the stuff in the book and now he's gone off index ETFs. He's doing better by buying stocks, which
That's
is really what we talk
fantastic.
about in the book. You don't need to buy index ETFs if you just want to be a little bit active, because you'll do better.
All right, before I get into the next question, if you're listening to this YouTube live stream as a podcast, then we'd love your help. And that means giving us a 5-star rating and writing a nice review. Now let's share the next question, which is from John. "Dear Dale and Janine, I feel I've become a much more structured and methodical trader in the last 12 months. And that's largely been due to the great advice I get every week when I tune into this great channel. I really enjoyed your episode on lithium stocks on the 17th. On the topic of commodities, hoping you can look at Lynas Rare Earths for me. I would like to buy as a medium-term hold. Seems to be bouncing back after crashing through support in the $8.60 and $80.80 mark. Can this stock surpass the prior high of $11.60 this year? Regards, John." Great question. Interesting stock, wouldn't you say?
I think it's a great question. A really, really, really good question. I do like how he's listening and how he's using what we're talking about. And that's the sort of stuff I want to hear. I mean, you ask people to put comments down on the bottom of the YouTube channel, because we love hearing stories like this.
Definitely.
Or the last 2 emails. And I think that's fantastic. But let's go to Lynas, because that's what he's asking about.
Yeah, look, I mean, it has been on a long run, this stock, and it's just really topped out. We're now seeing these peaks here, and it's more or less just traded down through that low and is trying to push back up again. Right now, I guess I'd just be, if I didn't own it, I'd just be sitting and watching this share.
Yeah, I would be too. I wouldn't be jumping in on it at the moment, because it is possible it is on it. It's had a stellar run, hasn't it, the last 12 months to 18 months. So,
it may need to just go up and then come back again. We don't know yet. And if it took out that level again that
you're talking
he's
about this
mentioned,
level?
860, 880,
Yep.
if it traded back below 860, say, then not that low, but I've marked
okay.
860.
Oh, so because you marked eco,
Yeah,
fine.
so if it traded back below that level, then I'd just let it fall and wait until it confirms support and then starts moving back up again.
I think what we're seeing at the moment on the market is really, it's just a bit of a challenging time on the market because the market's lacking direction. So therefore there's a lot of stocks that are really lacking direction.
Oh, there's a lot of stocks that have been falling, which is great, isn't it? Because we just
awesome.
sit there now waiting.
I know, I was saying that on our Monday market report, I think yesterday, and I said, like, Janine and I get excited when the market's falling because the more it falls, the more excited we get because we keep thinking, oh, what can we do on the other side of this? Because we don't care direction, in terms of where the market's going because you can't buy the market, or we don't buy the market, we buy stocks. So we're looking at what our stocks are doing or what ones we're interested in doing and then buying the ones that are going up and getting out of the ones going down. But the more the market goes down, the more exciting it is for us.
I think so. Look, it's a really nice stock. I think there'll be further opportunities in it. I just think be really patient with it.
Okay, cool. All right, well, let's move on. Anyway, now that's our thoughts on Linus. Now, Janine, I know you're loving hearing those great stories and those nice comments, which I mentioned before. And we really do want to hear how viewers are going. And I definitely know that we'd love to hear more about your successes and what's going on. So if you're just sitting there watching this show thinking, I'd love to let the team know how well I'm doing for watching the show, but you're a little bit shy, we don't mind. Put a different handle on it. Put Batman, I don't care.
Yeah, ring up and yell at Dale.
Ring up and, no, don't yell at me. But just, we'd love to hear your feedback because it helps us to know what you're doing and how well you're doing and how you're handling what we're talking about, because we do want to help and make sure that you are getting the right information and so you are doing better with your own investments. So please share your experience with us, whether you're watching us on YouTube or on Facebook. Just take time to comment below, and if you are listening to us on a podcast, remember you have to leave a 5-star review on whichever podcasting app you happen to be listening on.
I had someone the other day who was partway through our course and said, it's amazing how much I get just listening to the show as well while I'm learning. And there's a lot of things that I'm getting off a show that I just wouldn't have understood if I hadn't been doing the course. Yeah,
there is, because the people think they know what we're talking about, but there's a lot of depth underneath a lot of stuff we talk about.
You can also reach out to us through Twitter, or our Twitter handle is @WealthWithin, or you can simply hashtag the Australian Stock Market Show.
Now, if you enjoyed tonight's show, then give us a huge big thumbs up. That means click the like button underneath our video and let Janine and I know that you've really enjoyed the show and you're saying thanks to the guys.
If you called into the show and you missed out on us answering your question, then watch our show next Tuesday between 7 and 8 p.m. We'd love to chat with you. If you're not able to watch live, you can also email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in that subject line.
Also, we'd really appreciate your support for what we share with you each and every week. You can show support by subscribing to our channel right now. So if you've not done so yet, hit that subscribe button.
Well, that is it for tonight's show. We do hope you've enjoyed what we presented tonight. We've so enjoyed receiving all of your emails and thank those who called into the show. We love the opportunity to chat with you personally.
And as always, thank you for joining us tonight, and we hope you have a fantastic week. But for now, goodbye, good luck, and good trading.
Bye for now.